Hello, hello. It's Mary Bartos of the Bartos Group of Premier Plus Realty and my co-host and friend Cheryl Stokes from New American Funding. Hello, Cheryl.
Hello, good afternoon. Happy April.
Yeah, happy April. And I don't know about you, Cheryl, but it's time for the housing update. And this is for April 2021. And blow our hair back because I can't believe it's been a whole month since we were here last.
Yeah, and business just doesn't stop.
It does not stop. Well, because it doesn't stop, and let's get on with it and start going through these slides, shall we?
Sounds great.
Okay. Well, as we said, it's housing update for April. And, Cheryl, we keep talking about this because I keep getting this question. Is this time like the last time? Are you hearing that over and over yourself?
Almost daily. Yep.
Yeah.
People are concerned, and we are spending time explaining that they should not be concerned that it's the same.
That's right. And whether you're buying or selling, it is not like last time. So let's just dive into it. This is something that's near and dear to your heart, seeing cash out refinances. Are we using our homes as an ATM? Really is the question. And if so, what are we doing with it?
We do have cash out refinances right now because the rates are low and it is a great financial tool, but we are not seeing it at the level that we did in the past, nor are we taking those equities to a minimal amount as was done in the past.
Well, great lead in with some of our data, shall we? So that home equity cashed out that was in the red line here in billions with a B in 2006 was 32 billion. Look at where it is really in 2020. It's at, what is that, 15 billion?
Yep,
Cheryl,
15.
like about half.
So half as much.
Half as much. And the next slide really talks about tappable equity. Cheryl, talk about that and what that means.
And this is something we've talked about in a few other of our reports, in that the retained equity in homes is higher than it has been in a couple of decades almost. And that's what you're seeing in this report. The tappable equity is very high there on the right-hand side of the screen, whereas in the past, in 2006, it was not nearly as high. We were taking all of that equity out in 2006. And now in 2020, with the high equity, we're not tapping it all. So people are using it as a responsible financial tool, but not taking themselves to the limit.
I love that. I mean, really, if you think about it, 2020 and 2021 is nothing like 2026, or excuse me, that's a future 2006. What am I thinking? So, from that perspective, this is where the glasses come in, Cheryl, for me. You think about it, tappable equity is really a little bit less than half that people are doing, but look at that percent cash out refis. Is that
Correct.
Unbelievable? I mean, what is that? Almost 30?
It's less than half of what it was, right?
Right. And total cashed out in billions, again, half. And that percent of tappable equity, I mean,
even less.
Even less. And, Cheryl, read this from the Wall Street Journal, what they said.
Sure. The residential real estate market is on its biggest tear since 2006, just before the housing bubble burst and set off a global recession. Yet, in nearly every meaningful way, today's market is the inverse of the previous boom. In the mid-2000s, loose mortgage lending standards enabled borrowers with poor credit histories to purchase homes beyond their means, and I would say well beyond their means, sometimes with mortgages that required payments in the early years of the load. So this is something else that we've talked about exponentially, and I hear a lot from current buyers. I purchased a home in 1990 and I didn't need to supply all these documents. That's correct. But the supplying of those documents right now is what is ensuring that this is the inverse of 2006. We are making sure that the clients have the ability to repay, that they are retaining enough equity, that that market doesn't happen again.
Right. And, Cheryl, all of this kind of was leading up to forbearance and foreclosures, right? what was happening in those days. And if you look early on at this, and you know, if you're in this situation, we can help you. So this is not judgment. This isn't us pushing back on anything. This is just stating the facts. As a matter of fact, one of our clients was trying to get, they were in forbearance, but they wouldn't let him go to a foreclosure because of COVID. They just kept pushing out and deferring the payments. You know, honestly, Cheryl, the market shifted up enough that we now have them able to not bring any money to the close, and they're going to be solvent, which
There you go.
9 months ago was not the case. Even before going into COVID, it was not the case. And so when you look at these number of mortgages in active forbearance, you know, we're ticking along down here, you know, really, you know, quite steadily, you know, in the millions. But the bigger point of this, Cheryl, is talk about this slide. Talk about what's actually happening with forbearance.
Right. So what you saw in that previous slide was quite a number of people went into forbearance when it was offered at the beginning of COVID because nobody knew for sure what was going to happen. And everybody had the opportunity to take advantage of that. Many did, who really ended up continuing to pay on their loans because the catastrophe that they might have been expecting did not occur. Yeah. So most of those have come out of forbearance. They've paid their forbearance back in full. Of those that did have some concerns, they're working out a repayment plan. And then there's still that small percentage that are still in trouble and might need some help. But the percentage on an overall basis is at the lowest it's been really in years. And again, it's because so many people had that retained equity, and we're just not seeing the potential foreclosures that you might have expected. We're actually lower than we have been historically.
Well said, because quite honestly, right, who's going to let, you know, 20%, 30%, 50% of that equity in your home go?
Correct.
Right?
Unlike in 2006, when people had no equity, they didn't have an incentive to stay with the loan, and a lot of people walked away.
Yeah. So having said that, if you look at this, the number of consumers with new foreclosures, now this is kind of an interesting thing, a bit deceiving maybe, because it's pretty low because of COVID, and they didn't allow people, you know, I say allow, right. Even if you stop paying, they kept shoving it, right? So we are certainly lower than what we were the last 3 years. But what I love about this is what really Rick Sharga said. Cheryl, why don't you read this and kind of tie this in a big, nice bow?
Sure. There were about 250,000 loans in foreclosure prior to the pandemic, so early 2020, before the various moratoria, which is the stoppage of collections, were put in place. It's likely that most of these foreclosures will restart at some point during the new year. It's also likely that there will be borrowers, in addition to the 325,000 exiting the forbearance program, whose income will have been affected and who will default on their loans. So it would not be outrageous to estimate that between 500,000 and 750,000 homes will be in some stage of foreclosure in 2021. However, that, if you think about that last slide, is still within the range of normal.
Yes, in this range. I'm sorry, I was going forward because I was so excited about what the next slide said, which the Wall Street Journal said. So we're thinking high end 750,000, Cheryl?
Right. High end, and I think that might be a little bit high, but yeah, so let's say 750,000, and are we still in the inverse of what we were in 2006? And this slide states that between 2006 and 2014, there were 9.3 million households that went through foreclosure, gave up their home to a lender, or sold it in a distressed sale. That's a significant difference.
It is.
It restates that we're just not in the same place.
We, you know, and you and I are getting this question day in and day out, right? As a matter of fact, if you have questions, make sure, and we're live here, Cheryl Stokes, from New American Funding, and myself, Mary Bartos from Bartos Group of Premier Plus. We'd love to answer any questions that come up, so feel free to ask a question in the chat. You know, so what's happening in our area, Cheryl? You know, I've never seen, of course, I was not in real estate in 2006 and 7. Joe was, and it was kind of a wild time. But I have been here in 10 when we had the Gulf oil spill and no one was buying, okay? So take that from, you know, 2010 to today. Well, what is happening? You know, last month we were talking about the increase in prices and you got to see that. But Cheryl, look at these numbers of pendings that have gone up in a year in the different markets. Now I got to get my glasses to see this, Cheryl, because I'm like, I think I'm blind here. But Naples, it went up 202.8%. Wow.
It's
Pending
crazy.
sales, right? Over a year. And Marco Island, you know, was up over 233%. So when you look at that, you know, and compare it pendings to over a year, this market is on fire. Yeah, I won't sing the song, This Girl is on Fire, but you know the song I'm talking about. This market is on fire. And, you know, the pendings are crazy. Now, so that means we have buyers, right? And we have enough sellers right now to get that increase in pendings. But look at the next data point, Cheryl. This is crazy. Honestly, so that blue line is what happened in April and the fuchsia line is what's happening in March. And that should say 2021. I don't know why that says 20. But so this March, last month from April, it was, I think they've got these all screwed up because I think the blue line is the reduction in pendings in April was 64% in Naples. And in March, it was, and I think that is in the reverse because it's worse now. This graph on the logo.
Right. So the blue line
right over here is wrong.
Yeah, the blue line is March and the fuchsia line is April because the listings are going down.
Yes.
And I hear that every single day. I have lots of people who are pre-approved and looking for a property and haven't found one, can't find one. Yes. They go too quickly.
Thank you for helping me through this legend. As you can see, my brain was working like, what is happening here? Who did this? Oh, wait, I put these together. Sorry. I can't blame anyone. Down. I mean, in essence, I mean, you guys, if you're thinking about selling, there is no better time than now. The buyers aren't waiting because there's going to be some foreclosure. There's going to be some big bubble. You shouldn't wait because if we continue on at this increase and whatever path it is, you know, but here's the question I'm getting every day, Cheryl. The question that our team is getting is, you know, what am I going to do with it? What if I sell it? Where am I going to go? What am I going to do? So I submit, have you thought about cashing out in that equity and doing a couple different things? One is reinvesting it in real estate. Maybe downsize, maybe move to a less expensive area. Let's say, for example, you're on the water and you don't usually use your boat anymore. Or you're on the beach and you don't really walk the beach anymore. Let's get you to a place that's a little less expensive and take out that equity, right? And for a rainy day, for tomorrow or whatever, you know, maybe I don't need this big of a house. Maybe I need less. Or what about selling that primary house up north, wherever up north is, or out west or wherever, and moving into a larger home, getting rid of the high taxes because we are a low tax state, and, you know, getting into a more tax-friendly place or moving into your dream home. Cheryl, I mean, I don't know about you, but you've done a few of those moves this last year.
I have increased home size. I have sold a property. I've moved here within the last 10 years. So I've seen a lot of that myself personally. And those are all financial decisions you've got to make that are best for you. And it's something that I talk about with clients all the time because they kind of still are hanging on to their other property that they have up north because they might still want to use it. But in the end, they find out that they don't. So selling that home and creating cash flow from maybe their real dream home here in Florida is a great opportunity. Or
Absolutely.
if you do have that place on the water and you're now thinking about you're getting older and you need backup funds for fixed income, et cetera, maybe you sell that waterfront property and move into something that will carry you into the future.
Absolutely. And we've seen a number of those in the last years. I've got a lady that sold a waterfront, moved on Marco Island, moved off island, downsized because her and her husband, and now she's selling that again and moving near family. So there's a lot of reasons why people want to sell, pull that equity out. But let's not forget about this, because just today, Cheryl, I was talking to somebody that said, what am I going to do with this money? If I pull it out of here, I don't want to buy more real estate, Mary. Quite honestly, I have enough. Well, I called my financial planner and I said to him, Howard, what are you telling people these days? He's like, listen, markets, you're right. The markets are volatile. And, real estate can also be volatile. We're not sure. We don't think it's going to be a 2006. The analysts, there's nothing that says that. But if you're afraid of it, why not take it out, put it into an FDIC-backed money market and breathe? Breathe for the future. Breathe for your continuing care facility if that's something in your realm that you're thinking about, or your kids, college, or wherever you are in the life cycle of life. Sometimes it's good just to have that money in the bank. Cheryl, what do you think about that?
Absolutely. And, don't rush into a financial decision that may not be necessary. Look at your long-term plan and decide how to move forward, which includes purchasing, selling, and planning.
Absolutely. We have, as I go to the next slide, we do have a question from our audience, and I'm going to, let's see if we can hide this slide. Is it time to move? My question is, what can you say to buyers that are hesitant to buy at this moment because they're scared to buy at the top of the bubble? Well, it's a very good question. I don't think we're at the top of the bubble. I don't think we're going to have a bubble. Based on all the statistics we just reviewed over the months and even in this one, I think we're going to see maybe not astronomical growth like we've had, Cheryl, more gradual growth, like back to a normal market, and it may stabilize. But, from a standpoint of this has been a normal, when we, what is 2, 3, 4, 5%, 6%, if we see that increase every year, that's a healthy real estate market, right? But we're not going up at 15, 20, 30% year over year.
Correct. And we have talked about this in past months. Our actual increase in pricing and value is a good steady rate. What we're seeing right now is not a bubble that it's crazy high and going to fall and everyone's going to walk away. It's actually increasing maybe at a slightly higher pace, but the values are still projected to grow next year. There's nothing saying that our growth isn't going to continue. So that's how you know it's not a bubble. And we don't have anything saying that people will fall apart and walk away. So if we're not expecting the downside of the bubble, the foreclosures or that type of thing, there's no reason to think that you're going to buy at the high and it's all going to fall apart. None of those indicators are there.
Agreed. And I think that was a great question from that standpoint of what do we do? How do we do it? From a buying standpoint and a selling standpoint, therein lies the dance. This year, Cheryl, as you may know, the Bartos Group has helped over 250 families buy and sell, both closed and pending. And just in the first, I'm looking at the date at the bottom of my screen, the first 3.5 months of the year, 70% of those were buyers. Quite honestly, yes, we have sellers in some case, and we were able to get our buyers into homes in a multiple market situation. But for our sellers, multiple offer situation. But for our sellers, we were also navigating multiple offer situations, which is very delicate to know how to win on either side of that. If you're looking to buy and you want to win, you've put 5, 6, 7, 8, 9, 10, whatever number of offers out, and you can't win. Granted, it's the market, but 2, maybe it's the strategy that you're deploying with your agent. Maybe it's time for a change. Right. Likewise, if you're a seller and you're getting these offers or thinking that your agent's going to walk you down a path that may or may not work, you really want to make sure you understand all the things and that you have experience, because right now what you need is an experienced agent. So whether it's a Bartos Group or someone else, you need someone with experience that can walk you through a buy or a sell in these crazy times that we're in right now. Cheryl, would you agree with that?
I absolutely would agree. And I see that from a different perspective. I have pre-approved buyers who are making offers, and maybe they're not putting the offer together in a way that will win that offer. And that comes down to the experience of the realtor. And are they presenting an offer that can win in a multiple bid situation? And a lot of clients get disappointed if they're not relying on someone who can properly advise them of what the market's like. And, do they understand that if they go in really low, which traditionally you might have done, and negotiate your way back to the top, that really isn't something that you might want to do right now when the market's so hot, because everyone's coming in at their best.
Without a doubt. And that's to say, the other side of this is have a well-experienced mortgage lender, have your ducks in a row. What do we need to do? Do we need to get, an appraisal? If the bank is lending you money, they will. But can we do something with that? Somebody like Cheryl, who walks through this on a day in and day out basis to make sure that you're positioned if you're going to get a little bit of, of a loan. If you're going in with cash, then, those deals that you thought you might have, they really aren't there, because I just did the numbers today, Cheryl. Over 55% of our buyers this year alone were cash.
Yep.
So,
and cash, that's a great way to go. But from the lending side, since that's what I do, I really advise my clients to talk to their financial planner. I refer clients to go back to their financial planner on a regular basis, because they might not advise to go straight cash, because right now with rates so low, is that really the best thing to do? Maybe you leave your money even in that money market or invested. But buying and selling and lending and borrowing are all financial tools, and you should really think about it as a big picture. And are you making the right financial decision for yourself now and in the future? And I always refer people to get that specific advice.
That is such sage advice, Cheryl. It also comes with, maybe you go in with a strong position of cash, but you get some mortgage, but you don't need to put it as a, finance contingency, right? Or you do take the cash if it's sitting there, buy it out, and then you come back in and refinance. Because, let's face it, Cheryl, money's cheap right now, right?
Exactly. And I think if people talk to their financial planners, that's what they're going to hear.
Exactly. Well, Cheryl, as always, we've probably gone over time here because, our trusted marketing department always wants us to do it in less time. But if you find a question that you have later and you'd like Cheryl or myself to answer it, and you're watching this at some other time, please go ahead and put it in the comments. We'll make sure that we're watching them. And Cheryl, I don't know about you, but I'm looking forward to what, this is April, right? So what May has to offer. And until next time, I'm Mary Bartos with the Bartos Group of Premier Plus Realty, and Cheryl Stokes, my co-host in this from New American Funding. We wish you well, we wish you happiness, and we wish that you come down and buy or sell in Southwest Florida.
You can live here too.